From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 5th, 2018. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. But first things first, here on the daily time frame, this currency pair has been in an uptrend for quite a long time. We've been studying the pattern within the uptrend. I've highlighted it in several different ways. Of course, the long blue uptrend here, not too hard to see that it has been in an uptrend. The pattern within the trend is suggested by the boxes that you see within the trend line, the black, the green, the blue, the orange, and the black box. These periods of congestion or short ranges where the market bounced around between support and resistance, broke out, continuation. Bounced around, support, resistance, broke out, continuation. And that was really the pattern within the trend, all the way up above that blue trend line. You could see those periods where it dropped down and then broke out. Now, we've seen something different. Since Friday, we had some pretty good data out of the U.S. last week, which caused the U.S. dollar to appreciate against the New Zealand dollar, which means this currency pair tends to go lower when the U.S. dollar is getting stronger against the New Zealand dollar. And we saw Friday a sudden sell-off here of the New Zealand dollar, pressuring it down below the pink zone, which in essence was a new change in the pattern of the trend, where we specifically see it going higher, never breaking support and going lower. On Friday, we saw it do that. We saw it get underneath support, the pink shaded area, right around the 7,300 level, and even this week now opening back underneath it. Let's zoom it in on that a little bit better. So here we go. This is what we're talking about, that big red candle on Friday, a new change within the pattern, closing below support, the pink shaded area, and now we see this week opening up underneath. Again, previously we never saw it break underneath support and stay underneath support. Also at the same time, of course, breaking through the blue trend line and staying underneath the blue trend line. So that is a new change for this currency pair. Staying underneath 73.05, 73.25, which is the pink zone. I believe we must consider the fact that we're seeing a change of the trend pattern and the potential for a little bit of a push lower, another carry through of Friday's momentum, pushing all the way back at least to the blue shaded area, which is of course our next support that we can see over here on the left, 72.60, 72.40, and of course if it breaks that blue zone, we'd look for it to go lower again. The risk is the market changes its mind. It takes Friday as kind of just a temporary reaction to the positive U.S. news. If the market decides to go back up, it breaks back above 73.25 and begins going back up towards the orange shaded area at the top, which is our resistance. And then, of course, above the orange shaded area, we look for a continuation of the previous uptrend. So the pink zone is going to be the key point today, and really the first part of the week. Staying underneath it after Friday's sell-off momentum, will it continue to pressure down to the blue zone or lower and change the trend? If it doesn't, we would expect it to get back above the pink zone by the end of day today and start that rebound back towards the orange shaded area. So if we're going to trade this today, buying it right now under the pink zone, just not really a logical trading decision. Buying underneath the pink zone, given Friday's momentum. The only reason really I think you would buy this currency pair is if it gets back above the pink shaded area. So if we're not buying it under the pink zone, then it becomes perhaps an opportunity to go short underneath the resistance, testing that as resistance, targeting back to the blue shaded area. We want always lower risk and higher reward. So what's the risk? The risk again is a break above the pink zone. So our stop loss, if we're going to place a stop loss on a trade, which is always a good idea, our stop loss on the trade, and I'm going to make that line red just to represent a stop loss, would be above today's high. So we'd place a stop loss above if we decide to go short. That way, if it breaks above, we minimize the impact to our trading account as it potentially goes back up to the orange zone or higher. Stop losses above, targeting first the blue zone, if not lower down to the green zone or lower if it continues to go down in the direction of the trend. 4-hour time frame, not really going to change that a lot, but take a look at what the price action's been since Friday. We saw the fall down, the market stayed under the pink zone, now we challenged back, and then now we suddenly see another surge lower. So again, I would say as long as it's under the pink zone, we're focused on shorts. Only if it breaks above the pink zone do we look for it to begin going back higher again. This sudden sell-off here is promising for the day as well. So anywhere, I would say 73, 73.05 becomes an opportunity for you to take a short. Again, we know what the risk is. We don't want it to break the pink zone, and we target back to the blue zone today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.